Hey everyone, welcome back to Corporate Decoder. Today we are diving into the semi-annual shareholder report for the Empiric fund. And you know what they say, good things come in small packages, but sometimes so do surprising losses. Get ready as we try to find the real story behind the Empiric fund's numbers. The Empiric fund, it turns out, experienced a slight dip in performance, but hey, let's not judge a book by its cover. We will get into the specifics of what that means for the fund, its investors, and whether it's all smooth sailing or if there are storms brewing on the horizon. Before we get started, if you find value in getting clear insights from complex corporate documents, hit that subscribe button. Also, join our Discord community, the link is in the description. This shareholder report covers the 6-month period from October of last year to the end of March this year. It gives us a peek into how the fund performed and what it holds in its investment portfolio. It's essential for investors to understand where their money is and what's happening with it. Let's cut to the chase. What did it cost to keep your money invested in this fund? For Class A shares, the costs are about $107 for every $10,000 invested. This translates to 2,019% of your investment annually. Class C shares are pricier, costing $133 per 10,000 or 2.94% each year. These costs eat into your returns, so it's important to keep an eye on them. For the last 3 months of the reporting period, the fund decreased by roughly 5%. Now, this isn't exactly a party, but the good news is that it did better than its benchmark and Morningstar category. Over the entire 6-month period, the fund was down about 5.2% for Class A and 5.5% for Class C, better than the benchmark 7% loss. The fund says that its focus on high-quality companies made this happen. This table reveals how a hypothetical $10,000 investment would have grown or shrunk over the past decade compared to some common indexes. If you invested $10,000 in March of 2015, by March of this year, your investment would be worth around $18,300 for Class A shares. The MSCI US Small Cap Index would be worth about $20,500 $30. The MSCI US Small Cap Index would be worth about $20,300 for Class A shares. The MSCI US Small Cap Index would be worth about $20,300 for Class A shares. The MSCI US Small Cap Index would be worth about $20,300. This is with the investment load. This table gives us the average yearly returns for different periods. Over the last 10 years, the Empiric fund returned almost 7% annually without load, compared to the S&P 500's return of 12.5%. Keep in mind, past performance doesn't guarantee future results. The fund statistics section shows the basics. The fund's net assets total just over $23 million. The fund holds 44 different investments. For managing these investments, the advisory fees were $120 for the period. The portfolio turnover rate shows how actively the fund is trading its investments. The fund's turnover rate is only 3%. This tells us the fund is more of a buy and hold kind of operation and doesn't change its investments too often. Here we see how the fund's assets are divided. The vast majority is in common stocks at nearly 84%, while money market funds make up about 16%. This shows that the fund is mainly betting on the stock market. The biggest sectors that the fund invests in are technology, making up nearly 27% of the fund, industrials at around 22%, and consumer staples at around 15%. This shows where the fund sees the most opportunities for growth and stability. Finally, let's see where exactly the money is going. Coca-Cola Consolidated tops the list, making up almost 8%. Fair Isaac Corporation, the folks behind the FICO score, comes in second at almost 6%. Convolt Systems, a data protection company, is third at almost 5%. The fund states that there were no material changes during this reporting period. 2-4, what does this all mean for you? On one hand, the performance numbers aren't amazing, especially when looking at the S&P 500, but the fund did outperform its benchmark, and it might mean something or it might just be luck. It's worth asking if the higher fees of the Empiric fund are really worth it when you can invest in the S&P 500. But the fund did outperform its benchmark, and it might mean something or it might just be luck. It's worth asking if the higher fees of the Empiric fund are really worth it when you can invest in the S&P 500 index fund with much lower fees and much higher returns. Alright, that's our breakdown of the Empiric fund's latest filing. What's your take on these numbers? Are they impressive or not? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate filings. Don't forget to join our Discord channel in the description. Thanks for watching, and I'll see you in the next video.